Stock market daily chart review for September 23rd, 2022. What a day in the market. Nasdaq down a little less than 2%. S&P down a little less than 2%. 10-year treasury down 1.9 basis points. Gold down a little less than 2%. Bitcoin down 2%. Oil down 5.23%. MMRI risk indicator hitting all-time high, closing today 259. We're definitely in the mid-range, creeping up to the high range of this high end of risk. Less than 50 points away from extreme levels of risk. You can see since I started graphing this August 29th, it's just been picking up and picking up and picking up. With starting around 210, slowly kind of started creeping up. Now it's getting some bigger jumps, right? From 237, bumped up to 244, dropped down a little bit, shot up to 256, now jumping up to 259. Really creeping up there on the risk. Maybe it's past creeping. I guess that part is subjective. Let's take a quick look at the S&P 500 and some ETFs that represent sectors that make it up. Like, for example, XLK is a technology ETF. XLV is a healthcare ETF. XLY, consumer discretionary. XLRE, real estate. XLF, financials. Big uptick in the volume today with gapping down, right? Gapped all the way down here to this, a little bit over that 370. Traded all the way down here, but buying pressure brought it up. Now look to the left. We see we've been back here in June 2021. Now if it breaks this part, where is it going to go? If it does not hold the support, where is it going to go? We will talk about that in a little while. Technology stocks kind of looking the same, right? Drop down, we see that tail increase in selling. Really just been in this downward trend. But opened here, closed here. We got this long tail. Look to the left. We see that hitting some support. Healthcare. Healthcare, finally something looking a little different. Look at all that buying volume come in there. And 2 days in a row we've had a green candle. That's kind of like quasi-green. That almost opened and closed in the exact same spot. We are below this kind of support resistance area here. And looking to the left, we see it could, if it's not going to hold up right there, where I don't know where it's really building this, getting that support from. Take a look at 3 years. Right there. Maybe, maybe it's something that kind of in the past. There we go. It's like, yeah, right in there. So going back, sometimes what happens though is the further you go back, the weaker that support or resistance may get. It kind of gets brittle. But in this case, it seems to be working. But we really want to see if it's gonna be built, staying there. And if it, ooh, that's not what I wanted. If it breaks this area here, we want to see if what's gonna happen at this 120. Right? Is it gonna hold or is it gonna break that 120? Consumer discretionary. We've had a lot of selling volume come in and looks, looking similar, right? Where we got this long tail, still closed lower than it opened, gap down, looking to the left. We see it's hitting this this price consolidation area there. and we want to see if it's going to hold up or break down. But everything's kind of been breaking down, which would make sense, right? Because look, we've overall been seeing we're in a bear trend with these rallies up that keep failing. Real estate, same thing. We got kind of this doji-ish looking candle with a longer tail after a gap down. Still like lots of selling volume coming in. Financial sector, same thing. This long tail, closing lower than open, gap down, high amount of selling volume coming in. Looking to the left, we see it's hitting that price stickiness. Let's check IWM. Look at that. Look at the same thing, except for the body on this one is longer. Massive amount of selling volume coming in, where it's paralleling this day over here. There's lots of selling volume coming in. Looking to the left, we see it's touching this point right here. If it breaks, we'd have to look at go back further in time to see where it might fall at. Let's look at the Qs. Look at that. Isn't that amazing how a lot of this stuff is real similar? So here again, gaps down, closed lower than an open with this long tail, looking to the left, getting stuck in that price consolidation. What happened with oil? It was down like 5%. Woo! Doggies. Look at that. Broke that 82. I think it was just yesterday I was saying we have to watch to see if it's going to break that 82. Broke that 82. Let's go back. Let's look at 3 years. Where might we see some support or resistance? So we start looking to the left. You can kind of maybe right in here. But definitely, you see this. You can see that there. Maybe it's gonna break down. Where is that at? In the 70 to 75 area, and we're kind of right here is a little bit in the high 70s. So maybe we could just say like 70 to 80 seems to be, with the lower 70s to be some seem to be like the stronger support or making some support there. But definitely have a big downward candle today. Gold, where'd you go, gold? There you are. Some strong selling coming in. Look at that volume. 2 days of just high volume of selling. That's pretty high volume of buying. If you look at, like, here's kind of the average somewhere in there. This candle just really dropped down, and when this is going on, we're probably going to keep testing some lower numbers. Bitcoin, again, just still unable to. Right now, it's basically what is this? This is the widest range day. Got up to a little under 20,000. So just lately, it's not able to get above 20,000. Now we got our 20-day moving average at a little less than 20,000, and not looking real promising. We're really getting these candles. A lot of this red and green action is sort of, compared to back over here where it touched the 18,000. And then it was stayed up higher, around this 19 to 24 or something, 19 to 22, somewhere in there. Now it's sort of creeping down. And one thing that I wanted to show you guys over at Yahoo Finance. So this is, so we got a line chart with a weekly interval for the max amount of time. We see it goes back to 2016. It's the S&P 500, and this is what and this not helping me out very easily. Let's see if we can draw something here. That's not drawing it. Come on, draw a line. There we go. So this is what we're looking at. We're getting close to this, right? See where this kind of point here, and I'm not exactly sure what is that number. About 365. right? And we're at about 374. So if it comes down here, which it seems like it's going to, right? It went up for a little while. It's been peaking here. You see how it bounced back up. Kind of had like this short covering rally, whatever you want to call it, but it's in this trend going down, right? And you see it's like, here's kind of the top where we got this high, lower high, lower high, lower high. You got a low, lower low, lower low, lower low, lower low. If it breaks this, whatever around that is, around 366 or somewhere in there, then it's probably going to be testing around here. It's 330 something. That would be the next spot where it seems like it was kind of testing. So where does that leave you? Well, it depends on where you're at in your trading skill. So where it leaves you and where it leaves me could be two different things. More than likely, if you're watching this video, to attempt to figure out what to do, then you probably don't have as much experience than I do. So depending on your level of experience with this uncertainty, even like this for this week for me, I closed out some cash secured put options because they were profitable, but they were getting really close to testing my strike price, and I thought that it was possible that the market might drop more, and so I closed them out early. Where a lot of times I'm just selling a cash secured put option on expiration. If I get a sign, I take the stock. If not, I resell. This time though, because everything was dropping so rapidly, and my puts were profitable, I closed them out and resold significantly lower. But even right now, to just like, if it's really going to be dropping down, if the market's going to be dropping from whatever around this like 375, 366, dropping all the way down here to around somewhere around 333, like that might not be something that you want to stomach as a newbie. So what can you do? If you're a beginner, take action, but don't take action with real money. Get a simulated trading account. I personally like the Thinkorswim trading account, but get any one that you want. Don't use real money and just go crazy trading. Do everything you can think of in simulated trading. Learn as much as you can. And if it's just like paining you, if you're like, no, I'm missing out on making real money. If you're a beginner, there's a good chance you're gonna lose money. But hey, you're a grown adult. This is not financial advice. This is not recommendations. I'm not your financial advisor. Take responsibility for your decisions. But if you're relatively new, what I would do if I were you in this situation is learn as much as possible without risking real money. Paper trading's right there. You can't do it with real estate. You cannot paper trade or simulate trade owning a franchise. McDonald's doesn't have it. Subway doesn't have it. Whatever other franchises there are out there, Mako doesn't have it. They don't have simulated franchises. There's not simulated franchise. There's not simulated real estate flipping. There's not simulated landlording and dealing with disgruntled tenants that aren't going to leave your property. There's no simulating of that. Take advantage of what the stock market, the benefits the stock market gives you. One of those is simulated trading. So take advantage of it. Don't risk real money. The stock market is not going away. I'm guessing if you're watching this, maybe around like, I don't know, anywhere from 35 to maybe 50. And you're going to be alive for a little while. The stock market's not going away. The most important thing to do is start understanding things. Because you know what really sucks is when you lose money, you lose enthusiasm. So do the opposite. With that, you can always go to ihavesuccess.com, download all this free stuff, learn that way. You'll be emailed stuff daily, anything I can help you with. And with that, you guys have a fantastic weekend. Bye-bye.